But let's move on and talk about Majesco. Farid Kazani, the managing director of Majesco, joins us from the sidelines of the Emkay Confluence. Good afternoon, Farid, and thanks so much for joining in. Let me just get in some detail. In Q1, the company got hit on account of a slowdown in one large project, which is saying will eventually pick up in the second half of the year. So the question is that on track? Do you believe, this slow ramp up of the project that you saw in Q1 has resolved itself and therefore will reflect in your numbers in the second half?
So just to correct you, Rima, out here, we indicated to the street that there is a slowdown in one of our large programs. Right. And that typically happens in large transformation because it's all linked to how ready the client is in carrying out the transformation, and there is obviously some kind of work to be done before they actually get on stream completely. So while we did not have the impact in the Q1, we said that the impact will be there in the following quarters. We are hoping that things shape up in the next 2 or 3 quarters with this client, and it will take some time. Right now, we can't give a certain time when this will come back in a normal phase. But these are variabilities that do happen in our business, and it does get offset with other businesses that start shaping up. So while we said we've grown this quarter pretty well in Q1, we grew almost 46% on a year-on-year basis on the top line, 14.6%
coverall, right?
That's right, and 14.6% on an organic basis. So we've done well in the Q1. We also improved our margins to around 3.5% as compared to the previous year and previous quarter. So our expectation is that we will end up in line with our expectation on the organic business for the year. And clearly we stated it's not important to look at it on a quarter-on-quarter basis, but measure us on a year-on-year basis. Yeah.
All right, Mr. Kazani, then that point's taken. But for FY17, what can you do? I think you have ambitious targets for FY18. First quarter, you're saying that let's compare it on a year-on-year basis. Cool, that shows a big growth. On a sequential basis, it's more or less flattish or a bit of a downtake. So for FY17, what kind of numbers can we work with?
So we're not guiding very specific on FY17. We did put out our financial goals for a 3-year basis, and FY18 we said we will want to get to the $200 million mark. That is clearly predicated on some acquisitions that would happen. We are working on that. They are in flight. It will all depend upon how soon and what size of acquisitions that we close. Some of the things are clearly not within our control in terms of, in the end, winning the deal and getting the right, putting out the right value for the acquisitions. But clearly, if we are able to do good acquisitions, good level of acquisitions at the right time, we should be able to kind of meet our financial goals. However, our organic business is looking pretty strong. We've grown our business with the opportunity pipeline actually increasing. We've seen our order backlogs last year improving tremendously. We are working towards expanding that further. So while we will grow, we do believe that there will be an impact if the acquisitions don't happen on time.
Okay. Just stay on. We're getting the early rates from the European market, and they are taking heart from the strength in the Asian market. So the early rates in Europe are in the green, gains of close to about 0.3, going up to 0.5%. So that's supporting the gains that we're seeing in the Indian markets. Farid, coming back to you, you've outlined 2018 goals. Revenues of $220 to $225 million, EBITDA margins of 12 to 14%. How much of that will you be able to achieve by the end of FY17?
So I did allude to this earlier that we are not guiding year-on-year guidance at all, okay? And since, Rima, this is predicated on some of the build-up that is going to happen on the inorganic side, okay? So it's difficult to kind of give you any number for FY17 at this stage. You look at our growth that has been there in first quarter on an organic basis, that will give you some kind of sense of how we will shape up in the year, FY17, yeah?
All right, Mr. Kazani, then let's talk about, the QIP, 250 crores approximately. What's happening on that? You were evaluating various options, various acquisitions. Maybe could you quickly tell us what's the update on that front?
Yeah, we will come back with a much better update in the next 2 to 3 weeks, but I expect
there's no update as of now?
Since we have got... So we've got a board enabling resolution to do 250. We will figure out the investor interest in another couple of weeks' time to see if it's going to work for us. Our expectation is that we should be able to do that, with good ease, once we get the investor interest, and that funds are going to be used towards, capitalizing our U.S. subsidiary to kind of support the acquisitions in the U.S. Yeah.
Okay, we'll let you go on that. The Street likes what you're saying. Majesco stock is up close to about 1.5%. Have a very good conference. As we slip into a very short